Greetings to all investors and Tesla fans. The highly anticipated Tesla Q4 production and delivery data has been released, and the figures are creating quite a stir in the financial community. In spite of criticism from multiple experts for not aligning with Financial Group's consensus, Brett Winton, head of research at ARK Investment Management, has an other perspective. He believes that Tesla's Q4 results are groundbreaking rather than a bust. In the future quarters, increased production rates are anticipated, which might cause the stock price to soar above $400 in a matter of weeks. I would like you to hit the like and subscribe buttons first, though, before we learn more about Brett Winton and his opinions about the company. Put on your seatbelts now and join us as we explore the world of Tesla's Q4 data and future projections. Director of Research at ARK Invest, a disruptive innovation-focused investment management company based in New York, is Brett Winton. In particular, he is in charge of spearheading the company's research initiatives in the fields of innovation, energy, and mobility. Winton has offered insight on a variety of themes pertaining to innovation and finance, and he is frequently quoted as an authority on these subjects in financial news and media sites. Most people would agree with him because of his reputation in the financial industry, and the general public ought to be able to at least hear what he has to say in order to gain a different viewpoint and make wise investments. When Tesla released its Q4 production and delivery numbers, many experts chastised the company for deviating from Wall Street and other financial institutions' consensus. As the market was anticipating a drop of about 8%, Tesla's vehicle deliveries rose by 40% year over year, suggesting that Brett Winton is right when he says the automaker's Q4 deliveries were not amiss. According to his calculations, almost 60 million electric vehicles will have been sold by 2027, with Tesla contributing significantly to this total. He predicts that sales of electric vehicles will make up the bulk of the car market in the next 5 years. Part of the reason for the decline in Tesla's stock price last year was Elon Musk's contentious behavior. One episode that stands out is from May 2021, when Musk tweeted that Tesla would no longer take Bitcoin as payment because of environmental concerns. This caused a decline in the value of the cryptocurrency and drew criticism from the niche. Due to his use of social media to comment on Tesla's stock price and other financial problems, regulators, notably the Securities and Exchange Commission, have also been watching Musk's remarks and activities. Concerns concerning the markets for its automobiles were also on the company's mind. Due to the recent price reduction for its electric vehicles in China and other places, some investors have theorized that Tesla is experiencing a shortage of demand, particularly in the vital Chinese market. Updates on Tesla's progress over the last 3 months of 2022 have been released. According to Tesla, the company's yearly car production rose by 47% to 1.37 million, and its yearly vehicle deliveries jumped by 40% to 1.31 million. But according to a FactSet consensus of analyst expectations, Wall Street was anticipating Tesla to post fourth quarter deliveries of about 427,000 units. In spite of this, Brett Winton said that Tesla's stats are revolutionary rather than a miss, and he went on to say that increased production rates in the upcoming quarters might drive the stock price as high as $400 this year. According to Winton, production will decide whether or not Tesla meets its growth objective, not demand. This will pass eventually, even though Tesla's demand may be declining because EV owners haven't yet realized that tax rebates on some of their cars are the reason they bought. Given the multiple price reductions that Tesla is implementing in the majority of its markets, purchasing the car now could end up being less expensive than waiting for another promotion or for Tesla's vehicles to meet eligibility requirements. The company is introducing a new vehicle chassis that will be approximately 50% less expensive along with the Model 3. Musk revealed in October 2018 that the price of the upcoming platform would be just half that of the Model 3 and Model Y. Thus, there is still a lot of expectation for the new platform, even though the project has been postponed and could not be completed for a few years. The EV's delivery date is currently unknown, but Musk has assured us that manufacturing will much outpace that of the Model 3 and Model Y. This is due to production enhancements like the Giga Press, which molds large chassis sections all at once. The new vehicle platform was supposed to be introduced on March 1st during Tesla's Investor Day. Tesla's Investor Day, which took place on March 1st and lasted for several hours, disappointed a lot of supporters and shareholders and resulted in a drop in the price of Tesla's stock. Nevertheless, analysts maintained their general optimism in spite of this. Analysts at Deutsche Bank expressed their dissatisfaction with Tesla's lack of details on its next-generation platform in a Friday morning autos report. They pointed out that the business omitted details on the launch schedule, car classes and pricing ranges, and the financial ramifications. However, the analysts also noted that Tesla's shown remarkable development and unveiled plans for certain production and technological advancements, which they think will support the company's long-term growth in volume and profit. Tesla did not talk about the cost-effective electric vehicle during the ceremony. It was initially shown off at a 2020 Battery Day event. Furthermore, no information was provided regarding the launch date for the Cybertruck, the updated Roadster, or the status of the company's new heavy-duty truck Semi. Regarding how Tesla plans to work with his other company endeavors, Musk did not disclose any details. A Master Plan 3 document was still missing from the company's investor relations page as of Friday morning. In the end, Brett Winton thinks that if Tesla can build this affordable EV, it will once again set the standard in the EV market, regardless of the company's updates during quarterly calls or investor days. This is in line with the opinions of the Tesla bulls, who had earlier talked about how innovation could give companies a competitive edge. The similarities between investments in emerging economies and current developments were also underlined. Speaking of developing nations, Tesla executives at Investor Day refrained from revealing the company's most significant development until a few hours into the proceedings, when Elon Musk clarified during a Q and a session that the company will be establishing its next large manufacturing outside of Monterrey, Mexico. Still, no further information was given at the time. More details regarding the project were revealed by Mexican officials the next day. Among the details were that Tesla is anticipated to invest $5 billion in the near future and $10 billion in the long run in the vehicle assembly plant, which will employ 5,000 to 10,000 people. Situated on over 4,200 acres of land, the factory will be the biggest facility owned by Tesla globally. Musk stated at the Investor Day event that he thought certain Mexican officials were present, but he did not provide their names or positions. According to Winton, the company has a lot going for it in the upcoming years, which could result in greater stock price and more demand. He claims Tesla's self-driving technology has the potential to revolutionize the industry. Following the closure of the stock market on January 25, 2023, Tesla disclosed its financial results for the quarter and year ended December 31. In its most recent Q4 earnings report for 2022, Tesla reported $24.32 billion in sales and $1.19 in earnings per share. $324 million in deferred revenue from its driver assistance systems was included in the $21.3 billion in automotive revenue for the quarter. Investors might be concerned, though, as the company's automotive gross margins of 25.9% were the lowest in the previous 5 quarters. Due to its regionally diverse production, one of the largest marketplaces in the world, Tesla is gradually moving toward an even bigger increase in cars in transit by the end of the quarter. Thus, it goes without saying that developments are imminent. Despite the recent setbacks, Tesla's Shanghai factory is almost to the point where it can make more than 1 million units annually. As a result of the ramp-up at all of its plants worldwide, the company may be able to attain even higher production rates. How much do you agree with this assessment? Kindly leave your comments in the section below. Don't forget to activate notifications and subscribe. I appreciate you watching for the time being, and I hope to see you in more videos. I'm grateful.